Hello and welcome back to another episode of the For the Property Investor podcast. And we have, guess what? We've got the weekly news. And that means that Nick Bendel is with us and who presents the news, brings us the news. So welcome, Nick. How are we?
Greetings. I am going very well.
Good to hear. Good to hear. It's what have you been up to for the past week? You're well and truly into the new year now?
Yes, I'm definitely into the new year. I heard a rule that you can keep wishing people Happy New Year up until Australia Day. And we're
Yeah.
actually recording this on Australia Day. So I figure we're definitely now into the new year. And I have enjoyed the start to the year. I've had a very enjoyable, productive week.
Okay.
I so I'm a business hunter and scribe. We write content for finance and property professionals around Australia. And I know I've told you this before, Owen, but over the past few months, we've been ghostwriting 3 books for 3 different people who want to be able to hand out these books to potential clients. The books have their names on it. We've just delivered one of the 3 books, which was for a builder, and that was exciting. And we're continuing to work on the other 2, which are for mortgage brokers.
Fantastic. Fantastic. I've seen it being used as a very good promotional tool
Mm.
by many a business over the years. So it's a great service that you provide.
Well, thank you. I've met people and they've handed me a copy of their book. You just got me visualizing a situation where, say, my clients who have their books now, they go and meet people and they hand a copy of the book, and maybe the other person hands them a copy of the book because maybe Hunter and Scribe has written their book also, and everyone's just giving everyone books. What a perfect world that would be.
It is. It is. No, it's very good. Well, and yes, you mentioned Australia Day. Yes, happy Australia Day, everyone. And hope it's not too hot where you are at the moment because it's certainly parts of the country are going through a bit of a heat wave. But Leafield, my business, which is a national property management business, we've been very busy in the past week with more leasing. I said it last week as well. But after coming back from the holiday break, we had a record number of properties on the market for lease. And in the past week, we've probably leased 7 or 8 properties. So yes, it's getting on top of that. And trying to, because we've got more properties coming on, both new managements that need to be leased, as well as vacates that we're having with current properties. So, yes, keeping very busy. But Nick, I'm sure you've brought us some news. It's usually 3 stories. Do you want to hit us with what's in the news for this week?
I have got some very interesting stories for you. The first one is a little bit different. Local politician calls on government to set up its own bank. Richard Foley, a councillor with the Wagga Wagga City Council, has urged the federal government to, quote, address the escalating crisis in regional banking and postal services by establishing a government-owned post office bank. Regional banking and postal services are facing unprecedented degradation. Major banks continue shutting down branches throughout regional Australia, frequently closing the last remaining branch in towns that have relied on these services for decades, Councillor Foley said in a motion. Simultaneously, Australia Post is pursuing a corporate strategy of reducing the number of full-service post offices, replacing many with parcel-only facilities, and transitioning from perpetual licenses to fixed-term licenses for licensees. This will allow further closures and the downgrading of essential services. The Senate inquiry into bank closures in regional Australia held 13 public hearings over 15 months and issued a bipartisan report recommending that access to banking and cash be legally recognised as an essential service and that the federal government commission an expert assessment of a government-owned post office bank. Despite bipartisan support, the recommendations have not received a formal federal government response. End quote. Owen, this council motion from Councillor Richard Foley says that without urgent action, regional communities will continue to face reduced access to essential services. I'm wondering, how seriously should we take that concern?
I think it's a serious concern. You look at many regional areas. And yes, it's not just their banks, but their post offices are reducing the amount of services. I mean, with the reduction of parcels and mail, especially mail letters, in the past 10 years, it's made it very difficult for Australia Post to be at least covering costs, let alone making a profit. The amount of foot traffic going into post offices is a lot less as well as a result. So post offices, make a lot of their money from retail sales. So if there's less foot traffic coming in, then it's they're going to struggle to stay afloat. So the idea of a post office bank, yeah, it's an interesting one.
Okay, interesting. But is a government-owned post office bank the best solution to the problem?
Well, we had government-owned banks, didn't we? Yeah, a few decades ago, they all got sold off and privatized. So now, was that the best decision at the time? I think it was. Is the prospect of starting a post office bank for the purpose of providing essential services. Now, that's not necessarily a bad idea, but does it need to be government owned? Maybe government started or government backed to be able to get it up and running. But I'm sure there's some regional banks that could provide a good service and also provides some complementary services and some nice cross sells for them to maybe merge with Australia Post, or at least have some kind of association. So it's a good idea to think about and contemplate. But do we really want governments to get into business as a bank again? No, I don't think so. So, but something certainly to think about, Nick.
Okay, so you're saying no to a government-owned retail bank. Let me throw something slightly different at you. One of the complaints people make about our private banking system is that our banks provide loans for housing, and that's largely unproductive, but not for businesses. Of course, they are doing some business lending, but they're doing far more housing lending, and business lending is what creates wealth. So I'm wondering, is there a role for the federal government to create a bank that only does business lending?
It is that's probably a better idea, and maybe some government banked loans, which would still maybe go through the private sector. Why shouldn't there be some government bank loans for small business for them to be able to get up and running? Yes, there'll have to be some tight credit policies around them to be able to qualify. But why not? We're about to see the greatest transition in small business away from baby boomers, where they don't have anyone to pass the business down to. So that's why we've got a lot of people in their 60s and 70s and 80s still working in business, because they've owned the business for many, many decades and they don't have anyone to pass it down to. So what's going to happen to that level of service and competition in the marketplace, so that they can pass that on down to someone else? They might not have children who are in the business that they can pass it down to, or that can afford to buy them out. So yes, we need some government help to be able to back these small businesses and the small business industry in general. Otherwise, everything's going to go to big multinational overseas companies, and we've seen enough of that. And yes, I'm all for competition and a free market economy, but let's try and level the playing field the more small businesses we have, they're the biggest employer in this country. So let's support small business with some government-backed business loans.
Okay, so it seems like I've talked you into a government-owned business bank. Didn't pick you for a communist, but there you go.
Well, I didn't quite say government-backed or owned, but yes, yeah, it's we can certainly get some value out of governments backing the right type of lending.
Well, thank you, comrade. Let's move on to our second story. RBA waits in the wings as job market improves. The surprising resilience of the labour market may contribute to the Reserve Bank increasing the cash rate at its next monetary policy meeting on February 3. Between November 2024 and September 2025, the unemployment rate drifted up from 3.9% to 4.4%, and it seemed like it would keep rising given the weakness of the economy. But since then, unemployment has drifted down, with the latest Australian Bureau of Statistics data showing that unemployment fell to 4.1% in December 2025. The underemployment rate, which captures the share of people who are working fewer hours than they'd like, has also trended down, falling from 6.7% in May 2024 to 5.7% in December 2025. The market reaction to the strong December job numbers was immediate. Before the release, the market thought there was a 25% chance the RBA would raise the cash rate on February 3. After the announcement, the expectation of a rate hike jumped to 60%. Owen, let's discuss this. The most recent GDP data showed that the economy grew 2.1% in the year to September 2025, not much faster than the rate of population growth. Given that economic growth is moderate at best, why do you think the unemployment picture is so positive?
Oh, that's that's a very good question, Nick. It's I think people are looking at needing to stay employed. They're probably you're probably finding that people are taking less money than they have done in the past to be able to keep that cash flow going, especially when you look at the underemployment rate. That so it might mean that a lot more people are doing casual or part-time work, and they're taking any work to be able to keep that cash flow going. So it's yeah, that's probably where the funny numbers are coming out and the confusing numbers. So it's now, does that mean wages are going to drop as a result? Well, it's they've had a fairly hefty run, and to an extent they needed to due to the higher inflation that we've been experiencing. So maybe we're just going to have a bit of a pushback there, just like we're looking at seeing maybe rates go up. But if we do see that wages growth has come down or even has decreased, then that might mean a bit of a hold off on a rate hike.
Interesting. The last four annual results for wages, and the most recent is September 2025. So the last four quarterly results are 3.2% annual growth, 3.5% annual growth, 3.4% annual growth, and 3.4% annual growth. So wages growth is reasonably strong at the moment and steady as well. I'll be curious to see what the next wages data shows. It's actually being released on February 18, so still a few more weeks before we get that.
Yeah, so it's it'll be interesting to see what the RBA does at the next meeting, and I think they might be waiting to see what this wages growth rate might do in mid-February.
Well, of course, that data is coming out after the next RBA meeting which is on February 3. As unemployment has been falling, as you know, inflation has remained stubbornly high. The latest inflation figure is 3.4%, although new inflation data will be released 2 days after we record this podcast. I'm wondering, given that picture, given what's happening with economic growth, with unemployment, with inflation, what do you think the RBA should do? Not will do, but what do you think the RBA should do at its monetary policy meeting on February the 3rd?
Well, I think it will depend greatly on what this next inflation figure will be in a couple of days' time. If there's not too much change, then we might see a hold, and maybe waiting to see what that wages growth rate is like as well. Because if that is still trending upwards, then we might be seeing an increase in inflation as a result, as a trend. So we would likely see a rate hike in the next meeting. So yes, it'll be interesting, but it'll all come down to what the inflation figures are in a couple of days.
And we were speaking earlier about the economy being on the weak side. What do you think the federal government should do to strengthen our economy and strengthen the labour market as well?
Yeah, so it's a bit of a difficult economy at the moment. I mean, the government's main activity that it's been doing to be able to strengthen the economy is just increasing population with the mass immigration that we've had over the last number of years. And that has been slowing, as they announced, due to the backlash, because it's had a huge negative effect on the housing market, both for renters and for buyers. And so it's that's a difficult one. There's several things that they need to do, especially with housing. And I know the New South Wales government is doing a lot of good things to help with the supply side of housing. But I think the big thing that the government can do if it keeps on with immigration is focusing on the skilled trades that we need to be able to keep our economy going, especially the housing market. The mining and resources will just keep on doing what it's doing, but our general economy is fueled a lot by the housing market. So yes, we need those trades to be able to keep building and build as many as possible. So that's where I'd like to see it happen.
Well, our final story is one that I'm going to be very curious to hear your feedback, given that you do own a national property management business. You're going to have some very good insights. Co-living growing strongly from a very small base. The number of co-living homes in Australia has now passed 10,000, according to a report from Knight Frank, after a significant increase in interest from developers and investors in this type of housing in 2025. Another 1,110 co-living units are in the pipeline. Co-living involves renting out a small part of a large home. Involves leasing a small part of a large home. Typically, you get a private bedroom and a bathroom, as well as a communal area that includes a kitchen, living room, and workspace. Co-living tends to be cheaper than traditional renting, while also offering more flexible leasing and more social interaction. Knight Frank said, for now, New South Wales has dominated co-living development with a clear and supportive planning pathway, which the other states don't currently have. The model has also been demonstrated to work in the land-constrained Sydney market, but co-living is beginning to gain traction in other states as first movers enter the sector. We anticipate a further acceleration in the overall pipeline in 2026 as developers respond to growing demand for this product type. I'm wondering, what do you think about co-living from a tenant perspective?
Well, from a tenant perspective, it can be very beneficial because if they're someone who's very mobile in terms of, in 6 months' time, they need to or will want to move somewhere else, then they don't need to make a huge commitment to be able to set up a whole house or a whole unit, and then there's the other benefit of the reduced cost because they're sharing facilities, sharing the roof over their head, and as long as they get that bedroom and bathroom to themselves, but they have the communal space to share. It's not for everyone, but if you're on a tight budget and you need somewhere to crash, and you need a bed and a roof over your head, and you've got that tight budget, then co-living can definitely be something that works.
Yeah, makes sense. I mean, they can either stay at your place or try co-living. Those are probably the two options for tenants in that situation. What do you think about co-living from an investor perspective?
It can be quite beneficial from an investor perspective, and because there's generally higher returns, because you're renting out each room, and just say it's a 4-bedroom house, but you're renting out each room for maybe a third to a half of what the whole house would normally rent for if you were renting it as a whole. So you're generally getting much larger return, but you do have some bigger expenses, and you can have some fluctuations in the income as well. So yes, can be many ups and downs, but that's investing, and maybe it be considered a little more risky than a traditional unit or house or townhouse on a long-term lease. But yes, it can definitely get a much greater income return.
And what do you think about co-living from a property management perspective?
From a property management perspective, it's very much a niche, and it's not something that I think every property management business should take on, because it's very similar to what's always been around as boarding houses. But co-living usually refers to, and they might be putting boarding houses into into these numbers that you've talked about in this story, but because with New South Wales and probably more likely Sydney leading the way, there's always been a lot of boarding houses in Sydney, and but co-living is generally referred to as a lot of brand new built houses or existing houses that have been renovated to be able to handle renting out on a per room basis. So it's something that where you need to advertise it differently. There's probably a lot more owners who are managing it themselves. But you need to be careful about legislation, and there's a lot more ups and downs with it. So yeah.
Well, thank you as always for the great chat, Owen. We had a nice range of stories today. Really interesting to hear your views as always. And when we chat next week, the latest inflation data will have been released, and we will be one day out from the first RBA decision of the year.
Oh, the anticipation, Nick. Can't wait.
And just before we go, what is your prediction? I'm predicting the RBA will increase the cash rate.
I'm going to stick with a hold. And I mean, that being said, don't know what the inflation figures are going to be. So I'm going to assume that the inflation figures aren't going to do too much more than where it was last time. So let's stick with a hold.
Okay. Great to chat, Owen. See you next week.
See you then. Bye.